week number 13 of the year, starting with the COTC report from the Scotia Bank. Euro longs last week were largely untouched, and there was a stronger or bigger reduction in the short positioning, causing the net positioning in euro longs to increase, but largely it was driven by short covering. On the contrary, we saw EURUSD climb down significantly last week, quite aggressively, was falling for the majority of the week until it hit some very important levels in the medium term, which we'll look into in a moment. Pound also shorts added last week and longs kind of covered, which was a drag on GBP last week. Other currencies didn't really exhibit any strong positioning either way. Mostly open interest seems to be either stalling or a little bit climbing down. That means short-term investors and speculators have no theme to latch onto, not strongly opinionated anyway, which means that volatility should very likely subside as we go towards the end and middle of April next month, unless a new story comes along. So it means we're probably more switching towards, once the sort of momentum is teetering out, we'll be switching towards a more range bound market and employ strategies that make use of a range bound market as well. Looking at the inflation expectation in the United States overlaid with GBPAUD, or really for that matter any yen pair more or less, does strongly correlate with inflation expectation. Inflation expectations had a dip late February, but then started climbing up again. That kind of explains why yen pair has been continuously moving higher as well. Now, looking at inflation expectation on oil, if you look at the EIA report, they're expecting oil to peak in March-April, which should mean that we see a ceiling in inflation expectation in some yen pairs. Some I'll be keeping an eye on, but it's nothing you want to front run in a monstrous trend like that just now. Rather wait for the proper signal to preserve capital as well. Looking at the week ahead, next week is a shortened week as it is Good Friday, and then the following Monday will be bank holiday as well. So a lot of positioning will be to do more with Japanese fiscal year ending and starting, and also the first quarter coming to an end. European equities showed a good gain, so you would expect a little bit profit taking, possibly dollar buying during the fixes. There is the anticipation. However, one of the key themes right now is where we're pretty much certain what will happen is that the Fed won't do much. The ECB will accelerate the bond purchases, not the amount, but it will accelerate the pace, and that is helping the DAX and Euro stocks, small caps, a lot. So I covered that last week. A lot don't trade these, but if you do, it is a very straightforward trade right now. So it's a stock 600 Euro small cap companies. Pretty much since ECB said they will pick up the pace, it found its new leg higher, and I'm really expecting these high not to be an easy challenge, easily overcoming, continue and resume its uptrend as ECB is supportive with the QE program. Same thing for the DAX. Really straightforward trade at the moment with very little resistance in the way. Making new headway, uncharted territory, obviously new all-time highs for the DAX. But it's good to understand why this is happening. It's the whole central bank is behind that move where they accelerated the bond purchases. They're creating lots of liquidity and letting European assets flourish. So you expect that theme to continue. It's nothing, if anything, it will accelerate. So these are the major themes that are right now going on. I have a couple of trades I will interested to take the following week. Starting off with the Monday and Tuesday. There's not a lot of data actually. that is an interest. I'm just looking for organic moves for GBUSD to continue to build on a reversal. It started on the Thursday. Looking for it to continue to build to climb above 138.20 and have another bump up during the GDP that is due, I believe, on Wednesday. So final GDP. The numbers itself, I don't believe, will be revealing hugely anything new, but it will be more the dynamic of a positive risk environment pushing GBP back up in line with equities in the United States as well, and to claim back these levels between 138.20, possibly higher as well. So I'm looking for Monday and Tuesday that to play out. On Thursday, we have United States ISM manufacturing PMI data. Now, while it could be good news for the US, what tends to happen when you see good trend uptick in US activity, economic activity, you tend to see that overspill into the Canadian dollar. Canadian dollar right now is in a sweet spot where the Bank of Canada is decelerating their bond purchases, so they're slowing it down. They're not stopping it, but they're slowing it down quite significantly. And usually in historical demand, slowing down of quantitative easing will go to stopping quantitative easing and will open the path for raising rates. So market is, as a discounting machine, is starting to get very interested into Canadian dollar. If you look at any chart, Canadian dollar has been outperforming really well this year. While all these dynamics, there weren't anything new, they're just catching a little bit more fire in the near term. And the next week, instead of selling USD CAD, which I might still do, I'm a bit more interested in selling EURCAD. In the beginning of the video, I've mentioned that the ECB is accelerating the QE. Now we know that BOC, Bank of Canada, is decelerating. So we have a divergence here, central bank divergence that we can make use of. 2 weeks ago, I've pointed out that we will take out the possible exotic barrier 1.5, which we did. It crashed lower. And what I'm looking for now the following week is to take out these levels below and revisit most of 170, 147 area. So there should be a good 120 pips in there. Ideally, I like to use the ISM manufacturing PMI data as a trigger for a trade. Let me quickly show you what sort of the past performances were of these prints. So the last read we had was the 1st of March. That was here. We had a good, strong, bearish result. Some I'm hoping to see in the coming week. 1st of February we had somewhat bearish as well. So there was some bearish reaction. The following day even a bit stronger. 1st of January, 5th of January, pardon me, we had another good strong bearish reaction, and the read before there was the 1st of December. So we have a theme going here. 1st of December was a bit opposite, and let's check another few dates as well. 2nd of November, another really strong reaction there. That was, I believe, ahead of the US election as well. Then we had another read on the 1st of October, where the day before seemed to be a stronger reaction. The day itself was a little bit more decisive. But there seems to be a trend here. The 1st of September, we had a build-up, and during the US session, I imagine that took a whole way down. So it's sort of a theme with the ISM manufacturing, positive data coming through in an environment where we are now, where we know that one central bank is against the others. I expect speculators to step in during these events and load up short in EURCAD. Some that I'll be looking to do on the Thursday. Now, unfortunately, NFP, one of my favorite news announcement of the month, is falling on a day when the bond market is shot. And if you're trading NFP, if you're following it every month, really NFP it is about jobs data. It's quite an important thing, but really it's about what happens to bonds, because speculators and bond traders use the NFP to offload or load onto their bond positions, and that causes naturally really interesting and volatile moves in the Forex market as a ripple effect. And I tend to trade these, and they're quite lucrative, and most of the times you can see ahead what is happening. Are they selling bonds? That would then mean yields go higher, yen pairs tend to go down. Are they aggressively buying? or are they aggressively even covering their shorts, which is driving dollars high? So it's different kind of scenarios, and they tend to play out during the NFP and in a quite volatile way, where you can make explosive gains in the short term. Again, unfortunately, this NFP report will be happening on a day when the bond market is shut, which makes the whole idea of trading it a little bit unattractive, because it introduces an element of uncertainty. Usually we have the bond market to back up trade ideas in the Forex environment, but here right now in the coming week, as it's Good Friday, we won't have that. So I imagine, based on my experience from bank holidays leading into the Easter holiday, you tend to see good bullish reaction throughout the week in yen pairs. So I'm expecting AUD GBPAUD continue building on a Thursday, reversal ahead, and possibly start climbing above 885 again. That would be really good to see. But I also like to see Euro CHF. That's one of the pairs I'm looking for a trend higher to start building above these levels. So start finally climbing above 111, eventually make its way up to 1.20 for a short-term medium target. That's the sort of things I'm looking at for the coming week to play out. Now, again, this coming week we have data. We don't have a lot of data that causes a lot of interest. But what we do have is we will have a build-up going for the following week, because the following week we have the RBA meeting, and we also have the Fed minutes, which will give us a little bit more insight. And to my understanding is the RBA won't be very accommodative to the hawks, or they won't be hawkish. They might be neutral, or they might come across as a little bit more dovish. And for that purpose, I really like GBPAUD on the long side, as there's a little bit of divergence building up. If I do get a touchback into this level 179.62, I will be buying it. In any other case, 180 seems to be a good level to start thinking about the long trend. I've talked about the GBPAUD long trend building 2 weeks ago, when I was still trading at these levels. I gave you all the reasoning and about the yearly open acting as an anchor, and now that we scaled these higher levels, I'm looking for 180 to act as an anchor and to trend higher. I've covered all the reasonings why I see the trending higher in the video before, so feel free to have a look at it. But in the coming week, I like to think speculators will position themselves for the following week, commencing the 6th of April, to be long GBPAUD, as I would expect some sparks here from the RBA, or at least some positioning to push GBPAUD even much further into 182. So there's a lot of things we covered that's kind of driving the entire market in a particular direction. Again, very keen on Canadian dollar, probably against all currencies, but specifically EURCAD, as ECB and BOC are on a divergent path. I also like to be long risk, so maybe I will be entering one of the yen pairs, or ideally even S&P 500 itself again to climb higher. There's not much left until we hit the all-important 4K mark everybody's looking at. So it'll be interesting what happens exactly at that. There's a bit of angst that maybe a lot of people will be taking money off the table ahead of the summer. But I think that's something we will then see the reaction when we get there. In the meantime, same as last week, I'm really quite bullish. There's nothing to expect it to come lower. Fed is committed to QE, and there's no reason why we should crash in the times where the Federal Reserve is supportive of liquidity. And finally, again, I believe next week will be more a build-up into the following week, which will be the start of April and the start of a new quarter. I won't take your time up in this video and show you that, but if you cycle through your charts, what you tend to see incredibly strong moves beginning of every quarter, usually up to the 8th and the 9th of the month. So we're starting the new quarter in April, and a lot of the themes that are started this year are still kind of brewing. So the idea of inflation, momentum trades, you will see a lot of momentum and volatility in the first and the second week in most of those pairs. In the start of April, before the choppiness starts kicking in again. So I think staying active in the next couple of 10 days or so will be quite lucrative, and then after you can switch back into range trading and recalibrate into that kind of environment. That is all for me today. Thank you very much.